Hey everyone, thanks for tuning in to iSpeakRealty.com. Please like, share, and subscribe to our channels and pages. We'd greatly appreciate it. Today we're going to be talking about getting a to-do list together for your finances, getting all that in order. And number one is basically developing a household budget. And in order to do so, you can actually hire a bookkeeper if you want to actually put your books together and tell you exactly what you're spending in certain categories. Or you can start developing your budget by using your receipts that you have from your spending on a monthly basis. You might have receipts from last month, prior month, etc. If you can gather those receipts and start to look at what you're spending in certain areas, then you can start to really understand what you spend monthly and what your budget is all about. Number two is reduce your debt. Most lenders really look for a total debt load no more than 36% of your income. Some may be higher, 40, 42, 45. It depends on lenders and it depends on who you go through, right? So this figure really includes your mortgage and it includes all your debts, your car loans, student loans, revolving balances, all that type of stuff. So you really want to get your current debt load down to as low as you can. Typically anywhere from 8 to 15%, maybe even 8 to 10%. Try to get your debt load way down, guys, okay? Because when you're looking to buy a home, well, basically the lender's going to look at that debt load, see if you can afford a property. All right, guys. Number three is look for ways to save. Now, if you've developed a budget and you're spending quite a bit of money, say on groceries or eating out, or maybe even just going to Starbucks and maybe going to the new Dutch Brothers that's in town. Look at that spending. You might want to just sacrifice a little bit, start to put that money away. A lot of home buyers don't know, especially first-time home buyers, that there's programs out there for as little as $500 out of your pocket that may be able to assist you in getting a home. So sometimes you might only need $500 to about $2,000 to buy a home. And basically that's it, guys, for first-time home buyers. Now there's 3.5% down programs, there's 5% down programs. The more you put down, the more you can save, the better interest rates you're going to get, and the better equity position that you're going to have. All right, guys. So number four is increase your income. Now that might be easier said than done, but always look for avenues to increase your income. If you're in a current job position right now that may allow for getting a new position, you might want to try out for that. And you can always, move jobs later on down the road if you'd like. So you may want to, increase your income by also, asking for a raise. You never know if a raise might get approved by your corporation or your job. So number five is save for that down payment. We were just talking about that, looking for ways to save. So what you can do is open a savings account if you'd like, something simple. It doesn't have to be complicated. Putting $50 a month away in a savings account, in a year you'll have $600 saved potentially. That gets you to that $500 that you need to put down to a first-time home buyer program, right? So, all right, guys. Number six is keep your job. So if you do have a job right now and you are looking to purchase a house, most lenders want to see you in that job for 2 years. Now, that will show some stability. If you have a job for less than 2 years, you might still be able to get approved depending on the lender. 2 years is really the mark, but your interest rate is most likely going to be higher if you have only been on the job for a year or maybe even less. There are certain things that you might want to think about if you are looking at increasing your income and you're going to go to another position. Sometimes you want to make sure that it's in the same job field. Sometimes you want to make sure that it is, basically with the same company, because that will keep your history intact for purchasing a home when they pull your employment history. So if you're with the same company, you kind of stay in the same company and move up, increase your income that way. That might help. So you definitely want to keep your job for 2 years. Once you purchase a house, there's nobody's telling you that you can't switch your job. That's totally up to you. But if you are looking to purchase a house, you might want to stick it out for a little bit before you change jobs and see what you can do in terms of keeping that job for 2 years. All right, guys, number 7 is establish a good credit history. We always talk about this. Good credit is always very good in terms of purchasing a home because they're going to pull your credit. And you want to keep a good credit history by paying all of those loans that you may have on time and diversify those loans out there. You may want to get a credit card to establish credit, but be very frugal in terms of how you're using it. Be very disciplined, right? And if you're going to go get groceries that you may already be paying cash for, you could put those groceries on a credit card. Pay that credit card off with the cash you normally utilize, and that might build your credit that way. But you gotta be disciplined. You can't go swipe that card and not pay it back, not pay your bills on time. So paying your bills on time, keeping your debt load very low. A lot of times if you have a $1,000 credit card, the best thing to do is keep it below 20% of what you actually are approved for. So if you have a $1,000 credit card, try to only spend $200 on it. Revolve that, pay it off, revolve it. We want you to be comfortable with your credit situation, and that helps build good credit. But if you guys would like more tips, please tune in to iSpeakRealty.com next time, and we'll have more tips for you. Have a great day. Bye.